Let's change tracks. Let's talk more earnings. SP Krishnan, who's CFO Redington India, joins in to talk about their numbers. Mr. Krishnan, it's great to have you on the show. Q4 was a mixed bag. Tepid revenue was negated by margin beat. Overseas business saw good improvement, but India business was soft. What's been your assessment of the good in the numbers, and what's lagged your own benchmarks?
Yeah, good morning to you. Yes, for the quarter, if you see the growth in terms of revenue, we were at about 5%. The profits degrew by about 6%. But if you look at for the full year, we have had a revenue growth of about 6% and the profit growth of about 4%. So for the full year, we have still grown. And if you dissect this into India and overseas, in India, we had a degrowth in terms of revenue for the quarter by about 4%, and the profits degrew by about 27%. So we will talk about it. But on the other hand, as you have correctly mentioned, in the overseas, the growth has been pretty stronger. We had grown the revenue by about 10%, and we have grown the profits by about 7%. And this is for the quarter. If you take for the full year, the overseas first, we have grown the revenue by about 11%. And the profits by about 16%. Still, it has been a very good growth on the back of a good growth in the last 2-3 years. And in the case of India, the revenue degrowth has been 2%, and the profit growth has been about degrowth has been about 10%. The reason why I am giving these numbers is because it is important for you to know how you should look at this growth rates. There are two important factors among many which you should consider, which need to get adjusted in terms of this growth. One, as you all know, in July 17, we have had the GST implementation in India, and we being a distribution player, it does have an impact in terms of our buying, in terms of our buying price and the selling price because of the change in the taxation structure. That has resulted in the sale value being lesser on an average by about 6.1%. So if you consider this and adjust the revenue growth, if I need to take for the full year, instead of a degrowth of 2%, it would have been a positive growth of 2.5%. This is as far as India is concerned. And overseas, if you take the constant currency, because we have had last year a depreciation in terms of the Indian currency, appreciation in terms of Indian currency vis-a-vis what was there last year, and that had negatively impacted the currency conversion rate by about 3.7%. So if you take the constant currency growth for the year, they have grown the revenue by about 14% and the profits by about 19%. So in the midst of these, the challenging environment, we have had, a very decent quarter and a good year. And we think we will be able to come up in terms of the growth rate in the year FY19 for sure.
Right. Okay. Give us your sense on how do you see the India business growing versus overseas buy, and steps being taken to expand product portfolio as well as the geographical reach.
In terms of the product portfolio, we have always been adding new vendors. Recently, we have gotten into new verticals, which is outside of the IT distribution and the telecom distribution. We have started distribution of the health and medical equipment products, the distribution of solar products, and we also recently gotten into cloud. So all these are still in a very nascent stage. You will see as you move forward in the next 2-3 years, these can become pretty large, which will contribute to overall bigger growth in terms of revenue. And overseas, it is important for you to know the geopolitical tension in many of these markets, be it the problems in Iran, the problems in Qatar. We have a very large business in Turkey, where the last about 2 years there is an emergency which is continuing, and there is an presidential election that is announced in the next 2 months. And also there was a VAT, like in India, we had the GST implementation during the mid of last year. We also had on 1st of January 2018 the VAT implementation in UAE and Saudi, which are the two biggest market for us in overseas. So that transition also we have successfully, we have crossed, and with that we have had the growth rate. So I think as we move forward, things will settle down, and we should be able to grow faster than what we have done in FY18. And another important aspect which I thought I should talk about as far as the India business is concerned is our 100% subsidiary in the logistics space, which is ProConnect Supply Chain Solutions. As you remember, we started this company about 6 years back. It was a very small company, 100% dependent on Redington for their business. And now 6 years down the line, they have been consistently growing at a very fast double-digit rate, both in terms of revenue as well as in terms of profits. If you take last quarter, for example, they have grown their revenue by about 74% and the profits by about 33%, which is not a small growth. And if you look at the PAT percentage, it is north of 8%. So we have done an analysis of all the listed and unlisted players in the logistics space. This is one of the best PAT that we have seen, and we have been maintaining this for the last 6 years. And also the Redington part of the business, which is a parent business, that has come down to 21% of their revenue in the last 1 year. So they derive about 79% of their revenue from about 160 plus customers, outside customers. You can see some marquee names and the brands in that list, and this actually cuts across about 13 different industries. So they are just not in the technology products. They do logistics for FMCG products, pharma products, the chemicals, etc. So they are there across various segments. They have positioned themselves as an end-to-end integrated logistics services provider, and they are doing pretty well. We are very gung-ho about this company's growth also as we move forward.
Okay. You also had a large business coming from Government of India, or government orders were a large part of your total contribution couple of quarters ago. What is the update there?
Good. First of all, we should say we don't sell directly to the government. So there need not be a worry that we deal with government directly and there can be some increased credit risk, etc. We deal with system integrators like, say, for example, HCL Technologies, Infosys, TCS, etc., who does various government projects. But yes, we do indirectly cater to the government requirement, and it does constitute, I should say, a good part of the India business. We can't track exactly the percentage because we are an indirect player as such. In terms of the growth, yes, there is a slow and steady growth that's happening there. But what is important is the outlook. We see a lot of opportunities that are coming up in that space as we move forward in terms of smart cities, in terms of digital India projects, etc. As per IDC, which is an industry research data, the government is expected to spend about $22 billion in the next 4 years in terms of the spending in IT infrastructure. And Redington being a very dominant player in the enterprise space, we think we are going to have a lion's share in this business as and when it happens. So in terms of outlook, we are very positive, but it all depends on when those orders gets into the system.
The loss of Samsung business, the loss of Samsung and BlackBerry, let me put it this way, they've lost market share. They are no longer the formidable brand in the mobile market or the smart headphone market. Who's gaining on account of that, and how has that affected you?
Excellent. BlackBerry, we used to do a very large business with them, and when they had a challenge in terms of their brand, we have enlarged our product bouquet to multiple other brands, which has enabled us to pass through that phase of the BlackBerry exit from this industry. As far as Samsung is concerned, we deal with Samsung in overseas, not in India. In the mobility space, that business is still doing well. They are growing, and we are also participating in that growth.
is there scope for your margins to expand in near future purely because of the new channels which have started, the fact that there seems to be a definite trade up which is there, at least in some of the key categories? Because you know, I've been tracking your company for almost 7-8 years now, and whereas it's a consistent business, but the spreads are so thin that you know, anything which goes wrong can really add some volatility to your numbers.
Excellent. In terms of margins, I mean, please understand, even in FY18, we have had a good growth in the services business, and the services business, which also includes the logistics business, is something that we think is going to grow at a much faster pace in the next 4 to 5 years. We are very confident about it. Second, we spoke about the enterprise part of the business when you asked the query on the government business. That again is a very high margin business in our I should say the total bouquet of products. So if these two business, if it does well, we think it will do well in the next 4 to 5 years time, you will obviously see increased margin percentage. So we think we should see this margin becoming better moving forward. So what we have seen, it is more a 1 year phenomena because of various challenges in the environment and in the markets where we were participating. And another important thing that you should know, just look at it, since you said you are tracking it for 7 years, look at it over the 11-year period. Look at the CAGR. See, just I need to tell you, we have finished 44 quarters with this quarter. In all the 44 quarters, we have grown our revenue. There has not been a single quarter where we have had a negative growth in terms of revenue. In terms of profits, including the current quarter, which was a negative growth, we had only 2 quarters where we had the negative growth. In 42 quarters, since we have got listed, we have had a positive growth in terms of profits. So just thought I should make a mention about it. If you see the CAGR in the last 11 years, we had a 16% CAGR in terms of revenue and 15% CAGR in terms of earnings. So here is a company which had been growing very consistently quarter on quarter and has delivered a CAGR, a strong revenue and profit CAGR to the extent of 16 and 15%. So, I mean, it is not 1 quarter, 1 year. What is important is how sustainable we are in terms of the growth aspect. And another important data point for you, before IPO, if you look at the DRHP that we filed with SEBI, we disclosed FY06 numbers. We had 6,700 crores of revenue consolidated level full year, and we had a profit of 74 crores consolidated full year. I just need to give you another data point. Just look at 1 quarter, last quarter Q4, overseas, just overseas part of the business, which is which is one of the total the consolidated 7,500 crores of revenue, 6,700 for the year consolidated, here 7,500 for a quarter only overseas, and the profits 101 crores. So you can imagine this is the benefit of diversification. We have, here is a company which 18 years back started its overseas journey, started building block by block the overseas infrastructure. We today have about 26 countries, we have presence in 26 markets. And it is just not, we are servicing from one country. We have in-country presence in each of these markets. We have companies established there. We have people on the ground. We have stocks on the ground. We extend credit in the local marketplace. We are taking a market risk in each of these markets. So you should imagine how geographically we are diverse. Second, in terms of products, we used to be in IT distribution only. Then we moved on with the telecom distribution. Then we gotten into logistics services and few other services, including the cloud that I have just mentioned. And very recently, we have also gotten into health and medical equipment and solar. So you can very clearly see we have built a business which is definitely going to be self-sustaining. some issues here and there. If tomorrow there is a problem in India like what happened last year,
right.
We are not going to have a big challenge because there is a large part of the business which is happening overseas. Yes.
Right. Mr. Krishnan, you know, great to
I'm done.
get a comprehensive report from you with regards to your earnings and the business outlook that you have to offer to investors and viewers at large. Thanks very much for joining us and all the best for the future.
Thank you. Thanks.